Hello, and welcome to Houston Volunteer Lawyers Tax Legal Advice Clinic video. If you have not already done so, please watch the Legal Advice Clinic orientation video. You will find the link below. There is a questionnaire specifically for tax, and we remind you to please answer every question. This video is a broad introduction to the common questions asked during a tax legal advice clinic. For more detailed information on the specific issues, please review the Legal Advice Handbook. The most common reason why a taxpayer comes to a legal advice clinic is because he is unable to pay his tax liability. There are two situations on why they come. For the current tax year, the taxpayer has prepared his return and he owes money for the current year. For previous tax years, often the taxpayer has received a notification from the IRS either for a levy of wages, his bank account, or Social Security benefits, or they've received a notice of a lien. Regardless of the liability is owed and from when, all of the remedies are available. When a taxpayer cannot pay their tax liability, there are several remedies available to them. An immediate remedy is currently not collectible status. This is based on an economic hardship. That is, a taxpayer is unable to pay both their necessary living expenses and their tax liability. The fastest way to obtain this status is for the taxpayer to call the IRS. In some instances, the IRS will request substantiation through a Form 433. However, for many of our clients, the phone call is sufficient. This is a temporary measure. The tax liability will remain, and interest and penalties will continue to accrue. However, it does provide some immediate remedies while the taxpayer and an attorney review their other options. A second option available is an offer in compromise. This is a settlement offer where the taxpayer offers a dollar amount less than the liability owed. There are two types of offer in compromises: doubt to collectability and effective tax administration. Doubt to collectability is when the taxpayer's necessary living expenses exceeds their income. They simply do not have any money at the end of the month to be able to pay their tax liability. Effective tax administration is the opposite. The taxpayer's income is sufficient to cover their necessary living expenses. However, there may be some other equitable factors that the IRS should be taking into consideration when reviewing their offer in compromise. Some of these factors may include medical expenses that the taxpayer or a dependent is expected to incur within the next few years, or that the amount that the taxpayer will be able to pay during the collections period for the IRS, which is 10 years, would simply not pay the full liability, and it's just not an effective use of taxpayer time. If a taxpayer does not qualify for an offer in compromise, the only remaining remedy available is an installment agreement, a payment plan. Installment agreements are guaranteed when the taxpayer owes them less than $50,000 combined in liability, penalties, and interest, and the liability can be paid off within 72 months. Another reason why taxpayers come to a tax legal advice clinic is because they did not receive a refund. A common reason is that there's money owed to the IRS for a back owed liability. This is known as an offset. There's not much that we can do about an offset once it has occurred. However, if the taxpayer knows that their refund will be offset and they have not filed their tax return yet, we can refer them to the Taxpayer Advocate Service, who will be able to assist them in preventing the offset due to economic hardship. Another reason why a refund will not be received is because money is owed to another government agency. The most common reasons is child support arrearages or back owed student loans. If the taxpayer was filing a joint tax return, the spouse that does not owe the liability is able to file for injured spouse, which is Form 8379. If the tax return has already been filed, they simply file this form after the fact. If the tax return has not been filed, the Form 8379 is filed at the same time with the tax return. This ensures that the spouse for whom the liability does not belong will receive their portion of their tax refund. Otherwise, there is no remedy available through the IRS. The taxpayer must contact the agency that he owes or she owes the money to in order to request a remedy through them. Another reason why a taxpayer may not have received their refund is because of tax preparer fraud. We will cover tax preparer fraud a little bit later in this video. Another reason why taxpayers come to a legal advice clinic is because they are being audited. The most common reasons for an audit for our applicants are the refundable credits, deductions, and self-employed income and expenses. For refundable credits, it is mostly the Earned Income Tax Credit and the Additional Child Tax Credit. Within that, the primary issue is generally relationship and residence. Our clients are also audited for the American Opportunity Tax Credit, and for that, it's proving that the taxpayer paid qualified education expenses. For all audits, it is a question of substantiation. It's discussing with the taxpayer whether they are entitled to claim the credit or the deduction and whether or not they have the records to support their position. Another reason why a taxpayer may be audited is because of tax preparer fraud. Again, we will discuss this a little bit later in the video. A taxpayer will also come to a clinic because they've received a notice of a liability for which they do not owe. One of these situations is when the spouse owes the tax liability, in which case we are looking at innocent spouse relief, separation of liability, or equitable relief. In these scenarios, we are looking at a number of factors, including the situation of the couple, if they are still married or divorced, how the tax liability was incurred, and how the tax return was filed. If these remedies are difficult to obtain, however, if the spouse does not qualify for one of these remedies, they still may be able to qualify for an offer in compromise. In some instances, the tax liability has been assessed and the time for an appeal has passed, but at the time the taxpayer did not have the evidence to support their position, but they were able to find new evidence since the original audit or assessment that proves their position. In these scenarios, you would be requesting an audit reconsideration for the taxpayer. In some instances, where there is some circumstantial evidence or there's not as strong of an evidence to support an audit reconsideration, the taxpayer may consider filing an offer in compromise down to liability. And again, another reason is tax preparer fraud. And finally, we come to tax preparer fraud. When there is tax preparer fraud, the taxpayer must take some initial steps. First, the taxpayer must file a police report. The IRS requires the police report has evidence that the taxpayer was not in collusion with the tax preparer to perpetrate the fraud. In some instances, the police department will not take the report, believing it to be a civil matter or an issue for the IRS to handle. If this is the case, the taxpayer should contact Houston Volunteer Lawyers for further guidance. The taxpayer must prepare and file a tax preparer fraud form 14157. If the original tax return is invalid, that is, the tax preparer included deductions or credits and the taxpayer did not sign off on this return, then the taxpayer must file a new tax return. Because the first return is invalid, this is not an amended return. The next steps will be dependent on whether or not the IRS issued a refund. If the IRS issued a refund and the taxpayer received it but was not entitled to receive it, then the taxpayer must pay that refund back. There may be instances where the refund was split between the preparer and the taxpayer, and in which case we would be looking at remedies to ensure that the taxpayer is only paying back the portion that he or she received. Now, if the refund was issued and the taxpayer did not receive all or part of a refund, but is entitled to the refund, this is a situation where the tax preparer had the refund deposited into their account as opposed to into the taxpayer's account. Then we have to file a claim for a refund. There's first an administrative claim, and if the IRS does not respond to the administrative claim, there is a possibility of filing a suit in district court for a refund suit. Now, if the IRS does not issue a refund, this will be treated as if though a return has never been filed to begin with. They will process the tax preparer fraud claim. If there's a finding of fraud, they will process the new tax return and it will be processed as normal. If there is a refund that's owed, it will be paid to the taxpayer. If there are taxes owed, then the taxpayer must pay those taxes. And of course, if there's taxes owed, all of the remedies available when a taxpayer is unable to pay the tax liability will be available. And lastly, some other common questions during a tax legal advice clinic. Identity theft. Someone has filed a tax return using the taxpayer's Social Security number or has worked under the taxpayer's Social Security number. The remedy for this is for the taxpayer to file an identity theft affidavit, Form 14039. The IRS will issue the taxpayer an identification number to use to file their tax return. Non-filer. We have a taxpayer who has not filed tax returns for several years and they believe that they're going to owe a liability. The remedy is simple. The taxpayer prepares and files the tax returns. Once the returns are processed and we know the dollar amount that is owed, all of the remedies available for a taxpayer who cannot pay a liability are available. And then lastly, worker classification. This is when an employer has classified a worker as an independent contractor as opposed to a W-2 employee or vice versa. This is gathering all the relevant information and filing a Form SS-8 for an IRS determination. The biggest issue that we come across in worker classification issues is that the taxpayer does not want to report his employer for fear of retribution or losing his job. There's not a whole lot that we can do if the taxpayer is unwilling to report the employer, to get a determination. And in which case there may be a possibility to report it anonymously, but that does not guarantee that the misclassification will be corrected. Thank you very much for listening to this video. Thank you again for volunteering for a tax legal advice clinic. We do very much appreciate your time, and you truly make justice happen.